After 7 long weeks of declines, equities finally see a way to bounce back, getting down as low as 3,800 late last week. They saw a big bounce, not through 4,000, but through 4,100 this week. A lot of that stemming from those minutes we got midweek, which may have suggested the Fed may be looking at halting their rate hike cycle after the July FOMC meeting. None of that is set in stone yet, but clearly the market eyeballing that. Recall back on May FOMC, going back the other way, on May 4th, we were trading close to 4,300 E-minis. We declined about 11% over the next several weeks, culminating in this week's rally. Again, the first big bounce higher and rally on a weekly basis over the last 7 weeks. So what does this mean for volatility? Well, the VIX index has been in decline. We did see it nudging higher as the markets were coming down, but it never really saw a major spike. Volatility has been very subdued here, not only in equities, but in all asset classes after the May FOMC meeting. But clearly this week with equities rallying, we see the VIX index moving down. It did stay above 25, a level it has not settled below on any daily or weekly basis since going back to the middle of April. Lastly, what do we have next week? Well, we've got a full week. We've got a holiday weekend here, so a shortened week next week. We'll have some PMI numbers, which are expected to come in line slightly weaker, but still well above 50, that key 50 level. Likewise, we'll be getting the jobs reports, ADP on Wednesday, and then the non-farm payroll number on Friday. Both kind of coming in, looking at about up 300,000 at this point. It would be declines from last month's numbers, so it'll be interesting to see what happens there. One thing to keep an eye out for, GDP now continues to see modest declines in expectations for GDP, so that is now back below 2%. Likewise, that city surprise index, which gives an indication as to whether numbers are coming in stronger or weaker, is on year-to-date lows. So that obviously is a signal that economic data has not been as strong as perhaps the Fed has wanted. So ending the week, ending that 7-week decline that we've seen in E-mini S&Ps, rallying back above 4,000 and then 4,100. Looks like there's some optimism out there. Perhaps the Fed may be halting its rate hike cycle. It'll all be interesting, and next week's jobs numbers will play a big role in that, as well as the PMIs.